Good afternoon, everybody. Thanks for joining. This is Ryan Rippey, Director of Advisor Services for Synergy Asset Management. Today's going to be a great day. I know a lot of you hear a lot of pitches on how to grow your RIA firm and different things you can do in the industry. Here at Synergy, we feel we have a proven method and several success stories on how we've helped firms grow their AUM. Look, there's a lot of things that the advisor has to maintain. You have, of course, the number one, which is your time. So there's a lot of demands on that. You've got to figure out your firm capacity. There's obviously the cost involved with your firm, certain business goals and investment management things that you have to worry about, client relationships. So there's a lot of things going on in the industry. There's a lot of things going on inside the firm. So how do you grow your practice? And are you considering outsourcing certain things? So today's going to be great. We have a special guest. It's Joe Mass. He's our Chief Investment Officer and Principal of Synergy Asset Management. He's got a top financial pedigree. He's got 9 credentials. He's written several books, 30 plus years of experience in the industry. He's a national speaker. And truly what I feel is he's an authentic guru of strategic financial portfolios in the space. And I'm excited to go ahead and introduce you to Joe Mass.
All right. Thank you, Ryan. Thank you for those kind words and welcome everybody. Thank you for taking the time today. We'll hopefully make sure it's worth your while and you'll take at least, one thing away to think about differently. So let's get started. I'll try to go as fast as I can today. When it comes to why we exist to grow your practice. That's our why. Okay. When the Synergy team gets up in the morning, all hands on deck are how do we grow advisors? How do we grow your business? Okay. And this really stemmed from my 30 years in the industry. So I've been doing this for 30 years. I started off selling insurance for John Hancock as an agent, making 1,000 phone calls a week and doing the 4 or 5 appointments a day, the one close appointments. And I sold enough insurance that they made me a manager. So I then started recruiting, training, and hiring hundreds of financial services professionals. And as good as Hancock was, I realized that they didn't have a corner in all the good solutions and products. And being that I was young and dumb, I started a broker-dealer, right? No one told me I wasn't supposed to be able to do that. So at the broker-dealer, I was serving stockbrokers, financial planners, and insurance professionals. And so we were the mothership, right? We would help them grow their practice, trade their stocks, do their insurance. We were the broker dealer, and I quickly got a promotion there to the sales prevention department, AKA compliance, right? So the compliance rule got so severe that I decided I either needed to get very large, or what I decided to do is to go back into private practice. So I went back into private practice, and when I was, practicing, I had 3 firms. I had an SEC registered investment advisory firm, I had a formal business valuation consulting firm, and then a mergers and acquisition commercial real estate firm. And so we were best served to help the lower market business owner start, grow, and sell his company, then manage his post-entrepreneurial life. Well, a while back, I had some people from my past ask me if I'd manage money for them again. And I said, well, gee, I'm very flattered, but no, thank you. Life's good. It's manageable. It got a nice small private team. Well, after a while, I finally acquiesced. And so we started what we called SAM, Synergy Asset Management. And there's another play on words there. The other SAM is a strategically aligned asset manager that we're going to talk about over the next several slides. When I was coming back to help advisors, I was like, well, there's a lot of smart guys out there. There's a lot of portfolio managers out there. I just didn't want to be, another manager in that red ocean. I wanted to try to find a way to uniquely take and use my background and experience to leverage you, the financial advisor, to help grow your firm, to give you a competitive and sustainable competitive advantage. And so I thought, well, what do I think I do okay? What can I do well, right? And I thought, well, I manage money pretty well. I've learned a little bit about marketing, and I know a lot about valuation and M&A and how to build and grow, financial services firms. So I thought, that's great. Let's do that, okay? And so we ended up calling that a strategically aligned asset manager, okay? So we take a dynamic and global approach to managing money that focuses on growing your practice. Okay, so we're going to tell you about some of the problems and solutions and how we are a little bit different, and how we can help you grow the firm. So, first let's start with the problem. From the advisor's perspective, we all know the world's changing rapidly. Even before COVID, you know, the advisor had to help clients with low yields, low performance, volatile markets, and fear and uncertainty, right? On top of that, the advisors needed more time to acquire clients, service the clients. You have to have time to provide, independent fiduciary asset management and research and trading and billing and reporting. And then you needed time to grow your practice. And so, that's a lot. So our solution, through our SAM model, is that we align with top financial advisors all over the country, a very select few. We look to work with about 100 individual firms, okay? And then we help them acquire clients, free up their time, provide them 25 different portfolios that are trying to provide reasonable risk-adjusted returns, and then spend most of our time growing your practice and establishing that competitive advantage for you. Okay, so again, most advisors, they can't do it all, right? There's just too much on your plate, and that's where we come in. So our solution, to all of this change was what we call a SAM. We figured that we needed a new framework to evaluate all the critical facts. We wanted a new institutional and independent fiduciary process to integrate with financial planning and investment management. And so we call that SAM, a strategically aligned asset manager. And the way we've designed the model, SAM has two parts. First, you, the financial advisor, acts as the client's chief wealth officer, and Synergy acts as the chief investment officer. And so together, right, the SAM model delivers vast and integrated resources to create a unique fiduciary approach to wealth management. So it's something different, okay, that we're able to bring to several advisors. So when you think about it from the client's perspective, it's kind of like a family office model. Your client, the valued client, they're the chairman of the family, right? And the financial advisor is the chief wealth officer, and then Synergy acts as the chief investment officer and/or the chief of special projects. And so together, we're able to help you deliver, vastly integrated and resources and products and services that you probably can't offer on your own. Okay, but we're doing it as a team. So the client's kind of getting two fiduciaries for the price of one. Okay, so this schematic here, a lot of families have found this very comforting, welcoming, right? They like being the chairman of the family. They like to know that they have two chief investment officers or wealth officer, investment officer, kind of a corporate fund structure. And so it's been very welcome by families around the country. So for your role, you're the chief wealth officer, and you're going to help them with all the things that you do. Here's just a few, right? You're going to help them with strategic goals, asset protection, tax planning, risk management, cash flow planning, income planning, Roth conversion, Social Security optimization. You're going to, do all those things you do. And we have customized presentations and brochures that really talk about our wealth vision. And so, of course, if you want these to be customized for you, if you're a client of ours, we will customize presentations and brochures and materials so that you can market your services appropriately. Okay. As the chief investment officer, I'm responsible for the investments, for portfolio management, for the IPS, the market cycles, the economics. Okay. So we're going to take all of this off your plate, and we're going to communicate both to you and to the client. We're going to do that through weekly writings and quarterly writings and weekly and quarterly and annual videos. Okay. So all the material that we produce is client facing for you to use with your client. As analysts, we do three things: we investigate, we analyze, and we communicate. And usually the hardest part of that equation is the communication, right? I am a clock builder, and we know that most clients just want to know what time it is, right? They Joe, don't tell me how to build the clock, just tell me what time it is. But we spend a lot of time on trying to communicate so that the message that you and I are putting out, the narrative, it resonates with the client. So again, we'll take care of all the heavy lifting here while you take care of being the chief wealth officer. And then One of the things that makes us uniquely different because of my experience, because we had a formal valuation firm and a formal mergers and acquisition and commercial real estate firm, we have extensive resources for you when it comes to real estate and business planning. So on the real estate side, and I've wrote a book on this that you can use, we have marketing websites. We'll help you do Delaware statutory trust and 1031s. We can help advise and consult on commercial real estate, private REITs. We can do all the due diligence for you on those, take the risk off your plate, as well as, again, in the book, in residential real estate, we've got a lot to say about that as well. So again, there's a deep bench on real estate, as you'll see in a few minutes. We also have we provide a liquid tradable real estate portfolio. On the business planning side, this is probably where I get very excited because of where I specialize in my private practice. I think that every advisor, whether you're an income specialist or a 401k specialist, or whatever your specialty is, I think the business owner should be part of your three-legged marketing stool. They're just a great client for everything that you want to do. They need insurance, they need annuities, they need assets under management, they need 401ks, they need deferred sales trust, they need estate planning, asset protection planning, right? Employee benefits, all the things that advisors like to provide. They need. Okay, so we built, and I'll talk about this a little bit more in our marketing section in a few slides, but we've built an online business valuation program to help you attract clients. We also provide formal certified valuations, okay, for all purposes, whether it's for court, whether it's you're setting up a family limited partnership and you need to make sure you get those discounts calculated correctly, or maybe one of your clients has died and they need to value their business for an estate tax return. We can do all of that for you. So again, if you think about the family structure, the CEO or the chairman of the board, the client will say, "Hey guys, we had a death. I need help." We can help you on that. So you can think of us as an extension of your your planning department. Okay, succession planning, advanced planning. Again, there's so many things that we can do in and around business planning. Okay, so a lot of fun happens here, and I think this is where one of our best success stories is one of our advisors had used our valuation software, an online tool that we built for him, and that's available to you. And his client had an LOI, a letter of intent, for $6 million. And the client asked the advisor, who was his trusted advisor, what he thought. And he said, "Well, give me a minute," and or a day. And he ran the numbers, and he came back and says, "I think we need to get a formal valuation." So we went back to the buyer and says, "I think we need to get a formal valuation. We think it's worth at least 15 million." And without hesitation, the buyer said, "No, no, 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 no. Let's not get a formal valuation. Give me a day." And they gave him a new LOI the next day for over 15 million. And so just by him realizing that he had a tool and a resource, he was able to more than double the value that his client received in that sale. And of course, who got the after-tax proceeds? The advisor. Okay, so I could go on for days and days and days about the larger accounts that you can gain from working with business owners and being there during their succession planning and during their liquidity event. So I love business planning. We should probably do a whole session on that, Ryan, just on business planning, but it's very integral to what we do. Okay, so who do we serve with our SAM model? Okay, well, we partner with RIAs and their IARs. So we have a lot of our firms that are independent RIAs. Okay, there's one advisor, 2, 3 advisors. Okay, and we have partner RIAs that have 100 and plus IARs. And so we'll partner with you regardless of where you're at. Okay, we're agnostic. Coming back to help advisors, I wanted to take what we did and work around your strategy, your strategic plan. We didn't want to be the dictator of how to run your business. We just want to take our years of experience and technical knowledge and expertise and overlay that onto your strategic plan to help you grow. So we can help you if you're an independent. We can help you if you're with, another RIA, and then we have people at broker dealers that will look at those signals. So again, I think you can see that we're just not another money manager. We're really, delivering through the SAM model, the strategically aligned asset manager. We're delivering these asset management. So we manage money for you. We're going to help you attract clients, and we're going to help you grow your practice. And I'm going to walk you through each one of these offerings. So let's start with asset management. Our approach is a dynamic global approach to managing money. We have over 25 portfolios. We sub-advise on 3 mutual funds. We have 2 hedge funds. But in our DNA, we're not a put it in a box, set it and forget it manager. We are an active manager, okay? And we don't believe that you should pick investments by being constrained to a box. That, in as much as I love Morningstar boxes, it's really not the way you pick investments. So we're not constrained to a sector, to a capitalization, to a country. We really take a global and dynamic approach that's integrated in all of our portfolios. When it comes to the nuts and bolts, okay, we're going to do the professional institutional money management for you. We can do all the trading, all the reporting, all the billing, and a lot of our advisors, if you already have, a billing or reporting solution, that's great. We don't need to do it for you. But if you don't want to do it, or you're not able to do it, we can do it for you. We're going to help you communicate. Everything that we put out is going to be you're allowed to take and use and put out to your practice. So again, our economic updates, our market updates, our writings, they're all there for you. For those of you that need continued education, we have some special programs there as well. Of course, we're going to be your research department, your analysis department. We help with obviously the best execution and overlay management. So when it comes to the money management, we've got you covered from A to Z. We can do as much or as little of it as you need, okay? Now, a lot of people haven't heard of Synergy. A lot of people probably haven't heard of your firm. But what we like to talk about here is that Sam is an institutional manager. Okay, we have large institutional research and trading partners, but we don't have the that big name bias. We don't wake up on Monday at Morgan Stanley and our manager tells us which 10 stocks to buy, right? So we're able to trade and get research from the street, but we have an independent process on our own team of CFAs and engineers and analysts that do all the work. Okay, so we get the big name research without the biases. And I think a really good example of this that a lot of clients even resonate with is when it comes to bonds. So let me give you a bond example. And I'll start off by introducing bonds with a beer example. So when you go to the store, you can buy a bottle of beer. And if you go to the 7-Eleven store, the convenience store, you buy a bottle of beer and it's $10, okay? But if you're going to have a buddy over for dinner and you want a 6-pack, you stop at the grocery store. Now you're only paying $8 a bottle, but you're buying a 6-pack. And if you really want to have a party, you go to Costco or Sam's Club, right? And you buy a case of beer or 2 or 3 or 4 cases of beer, but you get them for $5 a bottle. Okay. Well, bonds are kind of the same way. When we go to buy bonds, we always buy at that Costco level. Okay. We're not buying at the retail level. And so we can go out into the market and find the brokers and the dealers that have the bonds that we need or want to implement into the portfolio, and we can get them at a better pricing than most people are going to get, unless you're buying with a lot of volume. Again, most advisors and even VPs at Merrill Lynch, right, they don't have enough volume to go out into the institutional markets and buy enough to get that Costco pricing, to get that economies of scale. Okay. Now, a lot of the times we'll buy bonds at the client's custodian, right? If that's the best execution. But if not, we're gonna make sure that we have best execution through our institutional trading partners. Okay, the next thing when it comes to investments is that, and not everyone needs this. Some advisors have great processes and some don't. So either way, we're happy to share and help you develop a dynamic and adaptive process. And this is a really friendly client, a client-friendly slide. So number one, hey, the team, we have to evaluate both the investor and the economic environment. And so there's 2 fiduciaries, Mr. Client. You get the wealth advisor as your chief wealth advisor. That's the financial advisor. And you've got Synergy, our team member, as the chief investment officer. And we have great brochures and material for you to tell this story, okay? And it really helps get clients. So 1, we've evaluated. 2, we're going to determine the asset allocation and strategies and back tests in Monte Carlo. We'll do all the heavy lifting while you are taking care of the overall allocation at the client level. Okay. Again, this is why we both have a role to play, and the clients are really warm and welcome to the idea that, yeah, one advisor can't do all this stuff. When they go to a restaurant, right, they know that the hostess and the waiter and the cook aren't the same people, right? Or when you go on a plane, that the pilot, the co-pilot, and the stewardesses, they're not all the same people, right? And so it's very interesting that the financial services world has made us come out and play all roles, right? It's not natural. When I was selling insurance, I had to do everything. I had to get the client, I had to service the client, I had to do the underwriting, I had to do the whole chain, right? Whereas if you were selling IBM sales copiers, you were told to sell copiers, and you had a whole team around you. So having a dynamic professional institutional partner like Synergy and a SAM model to come around you is a great story, and we've seen a lot of asset growth from clients. We've seen clients, our advisors, go from 500,000 to 250 million, from 3 million to 50 million. So the story here is we've luckily we find that it's resonating at the client level. Anyway, step 3, develop an investment policy statement. We've built an institutional software program that we give to you for free when you're working with us to help to do that, as well as we do portfolio design and implementation for you on every client if you need help with that. Okay. 4, we have to measure, right? We have to evaluate and communicate performance. So we will provide portals so your clients can have 24/7 access to their returns, as can you, as well as we'll put out your, quarterly performance reporting. And then 5, we have to monitor the circumstances. It's your job as the chief wealth officer to monitor the factors, the client idiosyncratic and unique factors, and it's our job as the chief investment officer to monitor the markets and the economics and stay up to that. Okay, so you can see it's a big job, and that's why 2 of us are better than 1. Okay? As a manager, we're also going to dynamically and adaptively manage money through cycles. Okay, and so this is a hot topic right now with a recession looming out there, and so there's a natural cycle, right? You have expansion to peak, to recession, to trough, and then recovery and expansion. And so we have portfolios, and we'll talk about these in the next slide, that that are meant for the peak of the cycle. Okay, they're risk-off portfolios, and we have other portfolios that are meant for the trough, right? They're risk-on portfolios, and then we have ways to combine portfolios so that if you're not sure if we're at a peak or a trough, then we can allocate and kind of be prepared for the middle of the trough. So regardless of where you or your client think we are at this economic cycle, okay, and no one really knows, right? I don't know if and where and when a recession is coming, or how long or how deep it's going to last, right? So no one really knows, so I'm not pretending that we know, but regardless of where you believe we are or your client believes you are, we're going to help you be able to position portfolios and tell that story. And then probably more importantly, as we go through that monitoring process and we go through the cycle, we're going to give you guidance on, hey guys, we might be towards the bottom. Why don't we start shifting a little bit more into risk assets, right? Or guys, we might be at the top. Why don't we start shifting a little bit away from risk into risk off? So as a chief investment officer, this is what I'm talking about when I say capital market expectations. When we're analyzing, calculating the market expectations from a risk and return perspective, and then using that information to help build better, reasonable, risk-adjusted portfolios to help your clients go through the cycle so they're not fearful. Okay. Now, there's only really 2 ways you can manage money. On one side of the coin, right? There's always 2 sides to a story. So on the tail side of the coin, this was made famous by Harry Markowitz, Nobel Prize winner, modern portfolio stuff, right? Your pie chart, and it's called asset allocation. And it's a risk management approach. Returns are always going to be averaged. They have to be mathematically. It's going to accept return to minimize risk. So it's more about minimizing risk than getting return. And it spreads money over a broad set of asset classes. So therefore it's providing diversification. And we have lots of portfolios for that. And there's the time to use that. Just like in a golf game, there's a time to use your driver, there's a time to use your 7-iron, and there's a time to use your putter. On the other side of the coin, we have portfolios that are based on the focus investing principles. Focus investing principles were made famous by Warren Buffett. Warren Buffett placed more money in fewer assets, right? Warren Buffett was kind of anti-allocation, right? So, and he also measured risk differently. He didn't measure risk as the ups and downs of the market, right? Because a movement in price of a security is no reason to buy or sell it, right? We need to look through price movement and find some type of fundamental or event-driven reason. But price alone it's really not a good fundamental reason to buy or sell. So on the focus investing side, it's a return seeking approach, right? Returns are higher and lower because you're willing to ride those ups and downs. You're not trying to lop off the downside volatility. You're trying to manage risk, okay? But you're more accepting of the risk. And remember, I think people forget this. You know, if you're avoiding risk, you're avoiding return, okay? Because you either have to be on one side of the coin. You can't be on heads and tails at the same time. If you flip a coin 100 times, it's going to land what? 50-50, right? It's going to land either heads or tails. I don't think once it's going to land on the side of the coin. Yet we all know that's what investors want, right? We know that the Joe investor wants all of the return and none of the risk. And that's just a pink unicorn, right? But we can always find the right mix by maybe one client wants to be 70% risk off and 30 on, 30 risk on, or another client might want to be 50-50, or a young client might want to be 100% risk on, an older client might want to be 100% risk off. So there's always the right allocation between the two principles, but there's only two sides of the coin. So again, focus investing accepts risk because that's how you maximize return. It seeks to place more money in fewer asset classes so you don't get drawn down by what we call over diversification. Okay, and it may provide diversification. It may not. If you only buy 3 or 4 stocks, it's not going to be diversified. We're usually buying somewhere between 5 and 30. Okay, so those are the two principles that we believe in: asset allocation and focus investing, and we have portfolios that will provide you exposure to both theories. Now, when it comes to research, we have an institutional process. So we screen for the macro factors and the technical factors, right? We're going to put together research on the economic drivers and quantitative and qualitative drivers. We have a margin of safety, and we always know when we're getting out before we buy. We're going to look at the sectors and countries and all that. Of course, we're going to report and then monitor, right? But I think what's probably more interesting is that when we go into our research deep dive, okay, we're always looking for attractive valuations, strong relative strength, and momentum in the fundamentals. But the way we get there is different, right? At one point of the cycle, so I put this our cycle icon back up here. So as we go through this cycle, okay, we might be spending 15% of our time on economics, 35% on quantitative, and 50 on qualitative. But at a different point in the cycle, we might be spending our time a third on economics, a third on quantitative, a third on qualitative, or at a different point in the cycle yet, we might be 100% quantitative or 100% qualitative. So again, as an active and adaptive manager, we're going to change our tools and our research. We're going to play a different game based on what the course is giving us. We're going to manage money differently based on what the market's giving us. So the way to think about it is the way that we manage money today is different than the way we managed it last week and last month and last year, right? It has to be, because we're going through cycles. So we don't believe that you can just buy it and set it and forget it, because we can look at this, we can look at the cycle chart and see, well, there's no way you can just set it and forget it. You're going to go through natural and normal cycles, and that's okay. We're not fearful of a recession, because the sooner you get to the bottom of the recession at the trough, the sooner you're going to recover. Okay, so you always want to make sure your client has a good mix of risk on and risk off assets, so no matter what the storm comes, you can handle. We've shown this in a slide in our market presentations before, but we showed a slide that every year of every decade, there's always something that surprises the market. We know that, we expect that, we just don't know what it's going to be. Whether it's a COVID, whether it's a debt battle, whether it's a Ukrainian-Russian war, whether it's Ebola, we don't know, but we know there's going to be something. Okay, and so we're not surprised as professional institutional investors when those black swans or baby black swans birth themselves. Okay, so what does all that culminate into? Well, our value proposition as a tactical active manager is that we're building, we believe we're building prudent and robust and purposeful portfolios by blending quantitative methods, right? Rules-based technical multi-factor models, charts, price, and volume. We're blending fundamental, bottom up, top down, yet we'll be passive when necessary. We're blending dynamic modern portfolio theory using advanced, and the most advanced quantitative and statistical methods. But sometimes, you don't want to be fancy. Sometimes you want to be parsimonious, keeping things simple. The fewer moving parts, the better. And so sometimes we're going to look at traditional asset allocation or tactical allocation, right? So when you think about it, the right portfolio matters. And so we have 22 core portfolios in 3 tiers. We have fixed income, asset allocation, and stock portfolios. So when it comes to our stock portfolios, um, there's the stocks, allocation, and bonds. When we come to our stock portfolios, we're going to have a focused dividend. Focused dividend holds 5 to 20 dividend stocks. Okay. Focused growth is really a global all cap, go anywhere return that can go to cash. So it can be large, small, and mid. It can be an emerging market. It can be international. It can be domestic. Okay. About 5 to 20 stocks. Focus blend. Okay, this is a portfolio that we rebalance once a year, so that's tax efficient, right? Some of our portfolios are tax efficient, some are less tax aware. We have a focus value, a focus faith base for those that want to find a thematic investment in a Christian Judeo setting. And then we have the ESG, which I always kind of laugh is that it's the secular version of the faith-based, right? So those are both thematic portfolios. So 6 different stock portfolios. And then we have asset allocation done 3 ways. And so we have tugboats. And our tugboats, if you think of a tugboat, it goes through rough water, it survives rough seas. And that's for your loss averse client. Okay. Excuse me. If you go to the speedboat, this is for your risk averse client. And there's a big difference mathematically and in behavioral finance on how we define risk aversion and loss aversion. So what we've done is we split the axis of the efficient frontier, and instead of building portfolios really in just that 2-dimensional world, we've expanded that into a 3-dimensional world, and we built portfolios for both sets of clients. So if you have clients that are loss averse, we can address that. If you have clients that are risk averse, we can address that in the speedboat. And then the sailboats, they're not really modern portfolio theory based portfolios. They're still a mix of stocks and bonds, but they're tactical rotation. They're tactical portfolios. We have a great video on our website at synergy-am.com. Synergy-am.com under the portfolios. We have a great video that will kind of explain the sailboats. Okay. Then when it comes to fixed income, we have an individual focused bond portfolio. And individual bonds right now are probably one of my favorite asset classes and favorite portfolios, because you can hold the bond to maturity, and with you're eliminating most of the risk except for default. So individual bonds are much safer than an ETF or mutual fund. Okay. And so we can again provide you an institutionally managed focused global go anywhere bond portfolio where you're making money in bonds. Okay. Then, of course, we have to worry about alternatives, right? Or satellites. So we have a focused real estate portfolio that has a split between beta and alpha, and this is tradable. So you can come in and out of this every day if you needed to. So we have a great exposure there. We have a focused metals portfolio, which is very exciting. Again, we can do deep dives in all of these on a one-on-one basis. Today, I'm just trying to give you the high level, but we do have a great metals portfolio. We have an energy fund, a private hedge fund called Crosslink Capital. We do a lot of Delaware statutory trusts and 1031s in private real estate, as well as the due diligence on private REITs. We have Rowan Street, which is another hedge fund that we manage. It's a focused equity strategy. And we build a lot of custom structured notes. So if you're not familiar with structured notes, it's something that you should definitely look into. And we're an institutional provider of those. We do not wholesale those, so we don't mark those up. We don't sell them. We custom build them for you when you need them. Okay, when it comes to marketing, hey, getting new clients and keeping them happy can be a full-time job. And so, that's our job, that's your job. We're all in it together. I'm not a marketing firm. I am a CFA. I'm a finance guy, but I've learned a little bit about marketing, and I have a doctorate who works for me on our publishing company. And what we've done is we try to think outside the box. We came up with what we call a marketing curriculum. So a curriculum is how people learn. People go to school to get a degree, to get a certificate. They go to adult learning classes to learn. So we thought, we're not the Snappy Krakens of the world. We're not the, we're not the wordsmithers. We're not the Facebookers. We're not a digital marketing firm. What we're able to do to help you is take you through a curriculum like we're illustrating here. So first is we can write a book, right? And when you become a published author, you earn trust immediately, okay? From the book, we can make you a workbook so that you can help educate your audience on the concepts of your book. And of course, that comes with a PowerPoint so that you can have the PowerPoint presentation as the audience follows along in your workbook. Then from there, we build you a high quality white paper. That's a leave behind brochure. And that leave behind white paper brochure turns into a ClickFunnels marketing website that we build for you. Okay, so we have we have ready-made curriculums for you to use on the valuation space. We call it online business valuation. So if you're interested in getting to business owners and growing, your clients, we have a curriculum all ready for you to go. Same with real estate. If you're interested in learning how to double your practice with using Delaware statutory trusts, we have a curriculum for that. And just ask Jason or Ryan after the webinar, and they can go through that during a discovery meeting with you. So again, we're trying to do a lot of different things to help you get in front of clients. Again, in addition to that, we can make custom brochures and white papers and books and things that you need. So it doesn't have to be a full curriculum. It might be you just need help with a brochure or a sales pitch or a process or something like that. So again, we will automatically be doing weekly and monthly and quarterly and annual market letters and videos for you to use. We built, again, an investment policy statement to help you illustrate the portfolios to your client. We're going to give you that online reporting system for you and the clients to look at, those client portals. And so there's so much more that goes into marketing. Again, we're not a digital marketing firm. We don't know everything, but we know that we need to play our part in helping you get clients. One of my favorite things to do is I do a lot of speaking for our advisors. So I'll go down and teach a class, an educational class with one of our guys in San Fran, or we'll go out to Montana and do one of our high net worth roundtable seminars, or we'll go down to Tennessee and do an in live personal market update as the chief investment officer, okay, for the group. So I love nothing more than getting out and trying to come and help you get clients. So I would love to come out and put on these presentations for you. The last thing that we'll talk about is our practice support, right? So let us coach you to a new level of success. So again, my credibility in doing this is that I've done it for 30 years. We did it at John Hancock for a large national company building agencies. We've done it for an independent broker dealer, and we do it now for individual practices. So again, here we're drawing on my valuation experience, my M&A experience, and our practice management through trial and error, right, for 30 years to help you bridge that gap, to help you increase your learning curve so you can go further faster, right? So I built a program called the Practice Protection Planning Process. It has three processes, P1, 2, and 3. So P1 is practice assessment. So the first thing that we do is we sit down with you and we do an assessment of your practice, right? Value it. We look at your operational. We look at your compliance. We look at everything, okay? Then we take, maybe one or two or three things that we've learned from your practice assessment, and that starts practice readiness, P2. That's where we now improve the things that we've identified during the assessment. Maybe you don't have a compliance manual. Maybe you don't have an operations manual. Maybe you're having struggle managing money. Who knows what it is? But we'll address it in the practice readiness. And then the final P, the practice transition. This is where we've taken steps 1 and 2 over maybe 1 or 2 years, maybe over 10 or 15 years, and we now help you get out of the business. Right? We help you bring on a junior. We help you sell the company. We help you merge, right? So we help you do a succession plan on your own business. What is it? The cobbler's kids never has new shoes or something like that. So, a lot of you are so busy being world-class advisors, serving, you're serving your clients that you don't serve yourself. So we can kind of sit in the background and be your financial planner, right? To help you with your practice transition. So, we're going to develop a well-documented and robust operating and succession plan so you can stay focused on what matters, most, which is sustaining and growing your practice. Okay, so as a strategically aligned partner, a strategically aligned asset manager who does more than just manage money, we're here to help really integrate into your practice. Okay, so again, the results of this is that we have a clear process to help you identify your goals, develop them, and then provide appropriate recommendations. So again, we're going to focus on money management, marketing management, and practice management. Okay, so if you're finding today's conversation interesting, what happens next? Okay, well, the first thing that we'd like to do is we'd like you to reach out to Jason and Ryan, or one of our team members, okay? And over the next 14 days, we'll book a discovery call. Okay, and that's where you can sit down and we can talk briefly, learn who you are. You can learn a little bit more about us. And then if warranted, then we can go into a practice assessment. And this isn't the full practice assessment that I just mentioned for the practice protection planning process. This practice assessment is a mini version of that to see if we can add enough value that you want to work with us. Okay, so this is where we can assess how much or how or where that we can help you. From there, we'll put together a solution proposal. Everything will be in writing, and so again, we'll take what we've learned in the discovery and the assessment, and we'll put it in a written proposal for you. And then from there, it's an advisor onboarding and training. We start to train you on how to use the portfolios, how to use the software that we provide you, the investment policy statement. We teach you how to put trade tickets in. We teach you how to mix and match our presentations. We teach you how to deliver our market videos and to book, times for us to come help you speak. And, we start just rolling up our sleeves and going to work, right? It usually starts off with the portfolio management, and then we spend a lot of our time on that marketing, right? And on the practice development. So we usually start off, get the portfolios going. We're looking for a long-term relationship with you. So we'll have plenty of time to build Rome. We don't have to build it in a day. But it all starts with a conversation, right? So just reach out to Ryan or Jason here. Email's probably best, I would assume, for them. They get so many phone calls, but you can call us as well. You can check out both our websites. But again, I think if you start off with that discovery call, you'll find both Jason and Ryan, they're really not sales guys. They're really world-class consultants, world-class coaches. They're nurturing. They're here to help you grow your practice, right? That's what we do. So anyway, with that, thank you so much for spending some time with me today. I look forward to meeting some of you in the future. And with that, Ryan, I went a little longer than I was hoping, but I did keep it within the hour. And once again, thank you so much for checking out how we can give you a sustainable and competitive advantage. So with that, have a great day. Ryan, I'll turn it back over to you.
Thanks, Joe. Great presentation, great webinar. Thanks everybody again for taking part of your day out and listening to what Synergy can do to help you grow your firm. I think it's key to set up that discovery call. Go ahead and email myself or Jason, and we can talk about a lot of different things like Joe went over. I think the best thing to do is to just really sit down and whiteboard it out. What are you doing great in your practice? What are you doing not so great in your practice? What are the things that you aspire to do in your practice? And then we can share some of our tear sheets and numbers and work with you on how those portfolios look if your clients' portfolios were in Synergy portfolios today, or we can do a lot of portfolio comparisons and get analytical on that as well. So again, I appreciate it. Thanks, Joe, so much. You did a great job. Appreciate everybody's time, and we look forward to talking to you here soon and starting that conversation. Everybody have a great day and stay well.